Federal Reserve meeting in DC, Jerome Powell at a press conference, Wall Street trading floor, headlines flash, rate cut incoming. Fed hints at easy policy, markets react. A major shift may be on the way from US Federal Reserve. Fed Chair Jerome Powell has signaled that an interest rate cut could come as soon as September, a move that would mark the past policy reserve is over a year and a half. Powell speaking at a recent incoming economic forum, Powell said that if the data continues to confirm that inflation is moving sustainably toward 22%, Powell speaking at the conference, if the data continues to confirm that inflation is moving us sustainably toward 2%, then the case for a rate cut becomes stronger. After aggressively hiking rates to combat record inflation, the Fed has held rates steady at 5.25% to 5.5% for several months. Now, with inflation showing signs of sustained cooling and the labor market softening slightly, policy market and are considering a move dovish term. Inflation turns 9.1% in 2022, 3.2% in mid-2025. Recent data shows core inflation is slowing, with wage growth and consumer spending stabilizing. At the same time, job growth remains positive but more modest, and some sectors like constructions and retail are beginning to feel the strain of high borrowing costs. New clips of job reports, small business closures, and housing markets data. Investors and economists are now widely expect a 25 basis point rate cut in September, with some predicting two cuts before the end of the year, especially if inflation could continue to trend towards. Wall Street Journal, Bloomberg headlines, stock market tickers rising. The market has already responded. The S&P 500 and Nasdaq hit new highs, while the bond market adjusted to the expected easing cycle. Mortgage rates, though still high, have slightly declined in anticipation of lower borrowing costs. Traders cheering Bloomberg's meeting with traders easier yield curve graphics. But not everyone is convinced. Some Fed officials remain cautious, warning that premature cuts could resign inflation or send the wrong message about the economy's long-term health. Fed governance in interviews, CNBC panel debates. Others argue that the Fed waited too long to start easing, and that the economy is already at the risk of a middle accretion region if rates don't come down soon. The political backdrop is also hard to ignore. With the 2024 election in full swing, economic policy is becoming a plus point. Republicans accuse the Fed of propping up the Biden administration, while Democrats argue the rate cuts are long overdue to ease the burden on consumers. Campaign rallies, Senate hearings on monetary policy. Powell has repeatedly stressed the Fed's independence, as says that the September decisions will be guided entirely by the data, not the policies. Jerome Powell said that we will do what is necessary to maintain price stability and support the American economy. Americans are shopping, small business reopening, interest rates dial turning. With just weeks to go before the next policy meeting, all eyes on inflation reports, labor trends, and consumer confidence. If the signals continue pointing in the right direction, September could mark the beginning of a new phase in America's economic recovery. Fed Watch: will rates finally fall in September? Subscribe for real-time updates on market policy and the road to 2024.